Let's just look at what's happening in commodities and talk about a sell-off. Look, over the past year, copper down 9.3%, oil down 9.3%, gold down 10.6%. The team over at Citigroup says the commodity supercycle is over, and they go on to explain exactly what's going on behind the scenes. They say you've got slower global growth. Okay, we know that. They say it's going to be around for a while. They say also excess supply. There are a lot more commodities out there than we all thought several years ago. And finally, of course, the stronger dollar. As the dollar goes up, commodities usually go down. So take a look at, in fact, where commodities have traded over the past 20 years. And here's the whole point. End of the super cycle. Yeah, there was the peak. Look where we are right now. All right, that's point number one. And look at where we have averaged over the past 20 years. In other words, that was resistance. That was resistance. Oh, it broke through. Then it became support back in '09. Well, guess what? Citi says we are going right back to effectively that line. We're going back to the norm. The super cycle is over. We're going back to the norm. And if you connect the dots, and here's the trade, they say if commodities are going down, demand for commodity-related currencies are also going down. Fewer people would want to invest in countries whose primary value is commodities. All right, so for example, they say if in fact prices go down 25% as they are forecasting over at Citi, you would have the Canadian dollar falling another 9%. There's your trade. Here's another one. Australia, big supplier to China, the Aussie dollar would fall 4.5%. And finally, Norway. Remember, Norway produces all that crude oil up in the North Sea. Their currency would fall by 3%. So as go the commodities, so goes demand for commodity currencies, and they all go lower together.